Hey guys, AKIL'S here. Today we're going to talk about alternative price charts to use to unlock hidden trading opportunities. So in case you were on vacation or somehow asleep during this week in the market, it was a pretty busy week. We had on Friday our non-farm payroll, which is a normal first Friday news event. But on Wednesday, we had something called, as I said in the podcast, Liberation Day. And this was the day where Trump's reciprocal tariffs were coming into play. And as you can imagine, that rocked the market as expected. And Thursday, if you were actively trading, you had to deal with the aftermath of that. I remember waking up Thursday morning, wiping the crust out of my eyes and seeing massive candles, only to see corrections a few hours later, only to see moves back up in the original direction. And it just made for a mess on the price chart. And here's the thing about trading. As traders, yes, we need movement in order to unlock trading opportunities. However, not all movement should be traded. When you're dealing with dirty charts that really give conflicting or confusing messages, it's really easy to get yourself into trouble. So in the past, I would just hit that little X button, close my computer screen down. But over the years, I've found alternative methods to really clean up the price chart, and that's what we're going to take a look at today. Now, the charts that we're going to take a look at are called range bar charts. I'm not going to go into a whole tutorial about that, but if you search here on YouTube, AKIL'S range bars, you're going to find a handful of videos giving more demonstrations and explanations of what exactly they are. So make sure to do that either before you watch the rest of the video or directly after. All right, let's hop in. And again, range bar charts are going to be good for breaking up a lot of this mess. We can take a look at euro dollar as well. Euro dollar's been doing this all day, right? It's spiked up, it's spiked down, it's come back up, now it's come back down again. We are trading at a previous level of structure up in here, but we've got no type of I wouldn't want to say consistent. It's hard to know what price is doing. We're all over the place. You'll see this when we go down to hourly, right? You can see, like, again, this morning, right? I woke up and we were up here, and then I went to the bathroom, I came back, we were down here, and then I went to the bathroom again. I go to the bathroom a lot, guys, and then we were back up here, right? So there's not much you can do in this chart, especially with this wick. So this is one where it's like, hey, maybe I take a look at a range bar chart, and maybe I even go to a larger one where it's like, trying to think of numbers here because I want to stay fib based. 34.55. Let's take a look at a 55 first. That may be a little bit too extreme. But yeah, so a 55 range bar chart, again, just gives you, this versus this, which looks better, guys. Not saying one is better than the other. They give you different stories because you want to see this wick. But if you want to kind of inside look at price action, this gives you a much smoother story. I'm going to go one down to, and again, I just like sticking with fib numbers, but you can use whatever range bar you want. Here's a 34, right? Just kind of gives you a clear idea of what's happening. At the same time, if you're someone looking to trade, let's say you're looking to get short, right? Do you see any reason to get short up here? We know what this is, right? This is price spiking up, coming down, and then working back up. But there's nothing you can do here. You guys see anything on the range bar charts that you may be able to take advantage of? Yeah. You may have a double top, right? So that same movement of up, down, and then kind of working its way back up, that may give you a valid double top here on the range bar chart. So again, we spoke on this at the very end of yesterday's session about range bars, better, worse, neither, just different. And the reason I like them, and again, I always use range bars as a normal part of my progression, meaning that I'm not jumping right to the range bar chart and saying, okay, rangies, what you got for me, right? I always get my perspective from the higher time frames, the minute-based charts, the time-based charts, and then I go down to the range bar charts for just a different look. So again, it's imagine me, I'm looking at the world within my normal glasses, and then after I kind of understand what's happening with my normal glasses, I throw them to the side, right? And then I put on my range bar glasses, and I kind of see if there's any different clues. So particularly in days like this, where we're getting wacky movement across the board, especially on the dollar pairs, right? And there's absolutely nothing, in my opinion, you can do with this, right? What do you do? This is nothing for me. I can't do anything with this. The ability to go down to a different type of chart may provide you with opportunities that didn't exist. But I do think you need to have a bigger perspective as well. It doesn't tell the full story. So while we're here, let me just get this into our pro trade log real quick. Obviously, I think targets are pretty obvious on this one, guys. Would you guys agree? Nice structure shelf right there. Fibonacci retracement, swing low to swing high, right between the 50% and the 618. See anything else there? What else? What else? What else? What else? What else? Come on, come on, come on, come on. Let me see if I don't have an emoji for it. Oh, I do. You see anything else here? A brain, Akil. Oh, yeah, structure. What else? Psychological number. Psychological number. 109, 109.50s. You got that as well. Or if you want to be a little bit higher, you can get 110 evens. All right, so let me get this into Pro Trade Log real quick, which I don't have loaded up. Give me a second. Hey guys, I want to pop back in real quick for a little bit of an update. I meant to come in earlier. I actually just finished up a very great interview with the trading battle. It was really, really cool. I don't know when it's going to come out, but we actually spoke about this trading opportunity today, so the markups look a little bit different. But you can see that the double top did hold. We did reverse. We got a nice little retest to the V point, the value of our double top. And so far, it's looking pretty positive in a continued move down to our 109.50 area or 110 even handle. Now, we spoke about this in a previous video, but if you're someone who was either late to this trade or looking for more confirmation, once we get this lower low, lower close, you can simply look for a pullback. This is actually something called a 2618, right? The 2 stands for the double top, and then the 618 or the 618 pretty much. I don't know how to say that in a way that doesn't get confusing. Would be a move back to our 618 Fibonacci retracement, taken from this swing high to wherever this low is ends up being. Now, it doesn't have to be the 618. You can do it at structure, but it's just kind of what we call the trading situation. Long story short, you can wait for a pullback, look for a reason for entry, and then look for perhaps a secondary reason or and a way to add to your position for a continued move down. So we'll see. I got to head out in about an hour or so. So if this plays out, I'll pop back on and share it with you. If not, maybe I'll try to do it before the video ends, or maybe I don't. I don't know. I'm just kind of winging this thing. All right. All right, gang, so I'm back. It is about a day later. It is Friday around noon. I'm looking at the charts for the first time today. I want to give you guys a little bit of an update on what happened. This was the euro dollar, obviously, because I've edited it into the video, right? But you can see kind of what happened, right? Price actually did give us that 2618 type of trade where we pulled back, gave us a lower low, lower close, and we worked our way down. We did not quite get to the 109.50 area that we were expecting. We then pushed back up. And then we came down again, and we're still hovering right around that level. So we did not officially hit the target level yet, unless you kind of adjust it for this little bump right here, which would certainly be something to put in your notes if this doesn't end up winning. But at least the directional prediction was okay. And this thing is still moving, so it could roll down. Hope you enjoyed. I'll be back tomorrow with our normal weekend trading edge video where I give you a look around the markets and share a few of my best opportunities. Make sure you subscribe, that way you don't miss it. And make sure you hit that like button if you enjoyed the video, and leave any comments or questions if something in here confused you, or if you have a topic that you want me to talk about. All right, until next time, plan your trade, trade your plan. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.